Today's episode is brought to you by Stream by AlphaSense, an expert interview transcript library that integrates AI-generated call summaries and NLP search technology so their clients can quickly pinpoint the most critical insights. Start your free trial at www.streamrg.co/PMC. That's STREAMRG.co/PMC. This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network, SNN Inc., and the Planet Microcap podcast and the representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast. Welcome to the Planet Microcap podcast. I'm your host, Robert Kraft. Thank you all so much for the support and for tuning in. Do me a quick favor. If you like what you hear at Planet Microcap, please take 2 seconds and give us 5 stars on Spotify or Apple. This helps us with the search engines so that more folks can also discover and engage with all things microcaps. Registration is now open for our next event, the Planet Microcap Showcase, taking place in Las Vegas at the Horseshoe Hotel and Casino, formerly Bally's, on April 25 through 27, 2023. We've actually already announced our initial speakers and sponsors for the conference, which includes a lot of the guests that you've heard on here, including Andrew Walker, who will be moderating 3 live Q&A podcasts with 3 investors pitching their ideas. We'll also have Maj Suedan from geoinvesting.com, who will be hosting moderated company presentations during his Tier 1 track on day 2, Wednesday, April 26th, as well as Scott Weiss from Semco Capital. On my podcast live, we'll have Matthew Martin, Ryan Irvin, as well as Sam Namiri and Harris Perlman. So we have many more announcements. There's more speakers to put out there, as well as our initial presenting companies, which will be posted, I believe, at the time of this publishing, probably on tomorrow, so on Wednesday, March 8th. So definitely tune in to our website to see that. And to register and attend, please visit www.planetmicrocapshowcase.com. See you in Vegas. My guest on the show today is Patrick Flood, investment analyst for the LATAM Stocks Newsletter. Latin America consists of 20 countries and a population of more than 600 million people, and it is one of maybe even the most underfollowed and underinvested regions in the world. Is it geopolitical risk? No doubt there's that, and not diminishing the significance of that risk whatsoever. We actually talk about it at length. But could it also well be that it's really hard to find good information about investments in Latin America, especially in English? That's where Patrick in his newsletter, LATAM Stocks, enters the conversation. He's an expat who's been living in Brazil full-time for the last 10 years. And after starting out working at a boutique asset manager, he moved on to work as an M&A analyst at a family office, then went on to work as a Chief Gringo. Yes, that's the official job title. Look it up. At one of the largest cryptocurrency exchanges in Latin America. Equity analysis is his first love, and he does the dirty work, a la one of our favorites here, Paul Andreola. Patrick goes through every local Latin American exchange and dives deep into their financial statements. Needless to say, I'm now a fan and really enjoyed my conversation with Patrick covering all things Latin America. Thank you again for tuning in to the Planet Microcap podcast, and please enjoy my conversation with Patrick Flood. This episode is brought to you by Stream by AlphaSense. You can find them at streamrg.co/PMC. That's STREAMRG.co/PMC. Stream is an expert interview transcript library that is starting to become an integral part to investors' research process. They have a number of interviews on a wide variety of companies, including TMT, consumers, industrials, real estate, and more. Stream provides over 300 expert interviews per week, and 70% of their experts are found exclusively on Stream. Stream is unlike any other transcript libraries. Stream integrates AI-generated call summaries and NLP search technology so their clients can quickly pinpoint the most critical insights. Stream's community of experts and thought leaders partner with Stream to build their professional brands and expand their industry influence. Right now, there are approximately 8,500 plus call transcripts available. For more information, please visit www.streamrg.co/PMC. That's streamrg.co/PMC. Patrick, thank you so much for joining me today. How you doing, man?
It's good to be here. I'm good. How are you?
Oh, not too bad. Just excited to learn about all the opportunities available in Latin America. We were talking offline, your expat that just relocated to Sao Paulo about 10 years ago. I did my little stint while studying abroad in Argentina. So it's kind of fun we've never really covered the space. And when I get into it a little bit later, my whole exposure to Latin American equities is almost 99.9% natural resources. So I'm excited to kind of dig in a little bit more and learn about everything that Latin America has to offer. But, to start things off, in your newsletter and you really do a good job of kind of setting the stage of like why you do what you do and why you love covering Latin American stocks. Obviously, you love it down there. You now live there. Your fiance, the whole bit. But to give some context, Latin America consists of 20 countries. It's got a population of more than 650 million people. Why is it still one of the most underfollowed and underinvested regions in the world?
Yeah, so it definitely is underfollowed in my opinion. I don't have many English language sources that cover Latin America well. So it's one of the reasons I started, writing up some of my investment research. I think generally, investors everywhere have a home country bias. So they don't invest outside of their home market in general. So Latin America, especially. I think Latin America, the local markets aren't even as well covered by the locals. It's not as deep. And, the investment class in Latin America, generally speaking, isn't investing in equity. So, Brazil has a hyperinflationary past. So they like land, they like real estate, they like short-term fixed income. And that's starting to change. The younger investors are meme stocks caught on here just as much as they did in the US. They like crypto. So you're starting to see them move out the risk curve towards equity, but it's still, not as common as fixed income investing. And then obviously there's the geopolitical risk. So it's perceived as being more risky generally. Obviously you need to look at each market individually, but Argentina is hyperinflating as we speak. So I think currency risk goes hand in hand with political risk here. Peru just had an attempted coup and, the largest copper mine in the world has been shut down. Brazil just had an election. I think the political risk here is a little overstated, especially by the locals at the moment. And yeah, and then I think there's also just a lack of contact too. You mentioned you went to Buenos Aires, and I meet a lot of people who go to Buenos Aires. Some people come and they'll travel to Carnival in Rio one time in their life, and they'll spend 5 days in Brazil. But, there's not that many people that go and really get to know Ecuador or Costa Rica or Colombia even. Colombia is starting to improve. So there's just a lack of contact, right? And I think a lot of Americans in particular, when they meet Latin Americans, they meet, the ones that move to the US and they work in the service industries, but they don't get to see, the world-class entrepreneurs and managers that are here. So they don't even really think to look at Latin American businesses as investable long-term opportunities.
You brought up a couple really interesting points there that I wanted to go down. But first one is because you mentioned geopolitical risk. That's literally the number one reason you hear why folks avoid Latin America. You just literally rattled off in 4 different countries, like things that have recently happened or are happening. So how, at least for you, when you started looking at Latin American equities and you knew about both the history and, you've been there 10 years. So you've been there during times in various regions where stuff's been going on. How do you get past that, in order to be like, okay, I still feel secure with investing in this region or looking at, high quality businesses that operate in this region?
Yeah, so I think the first thing you do is you get used to the worst case scenario, which is Venezuela, right? Venezuela, the most recent company I covered is Gruma, which is the largest tortilla manufacturer in the world. And they had a really interesting history, about 3 pages of their annual report. is the history of how the Venezuelan government tried to expropriate all of their assets in the country in 2010. And it was an ongoing process. The Venezuelan government owes them like 500 million US dollars plus interest that they'll never get. So that's written down to zero. But, with political risk, the bottom is always deeper than you think it's going to be. So you kind of just accept the fact that it could go to zero, like any equity investment. But I don't think that's exclusive to Latin America, right? Like if you were invested in Russia and Ukraine last year, the same thing, it's the equivalent to Venezuela, right? So that can happen anywhere. So I think you do your best to understand the country, the economy, where things are going socially. Demographics are always useful. And then you look on a company by company basis and you try and find the industries you think are going to perform well under the current political environment, or where you might think the political environment's going in said country, and you discount appropriately, right? So, in Peru, if you wanted to invest in a copper mine in Peru now, obviously you're going to put a lower valuation on it than you did 6 months ago, but you might still take the risk.
Absolutely. I mean, looking at one region in particular, like speaking of Brazil, you live and work there. Brazil's the largest country, both in size and population in Latin America. It was once seen as an up-and-coming superpower on the world stage, hosted the World Cup in 2014 and the Olympics in 2016, major exporter of many industrial resources the world needs. But it feels like, and maybe this is just from like from a U.S. perspective, and you're on the ground there, so I'm sure I'm sounding like an ignorant fool in many respects. But at the same time, at least from my perspective, it feels that promise hasn't really actualized for many different reasons. You see reports of like, all these soccer stadiums that were built in remote rural areas that are now like ghost towns, stuff like that. So using them as an example, how should folks also better understand how to think about Latin America long-term, looking to allocate capital there?
Yeah, so there's a saying here that you'll learn like in your first business school class in Brazil. Brazil's the country of the future and always will be, which is true to an extent. But, I've been here 10 years now and it's gotten better. So it's 2 steps forward, 1 step back. And if you pay attention to the, Western media right now in Brazil, they'd have you believe it's probably taking a step back. The local investment community certainly believes so, and maybe they are. But, long term, I'm as optimistic on Brazil as I've ever been. It's getting better here. Since I've been here, I've seen crazy improvements, right? Like the cost of a taxi was so much higher than before Uber. Before WhatsApp was here, you paid per SMS message, right? Like there's 300,000 deliverers on iFood now. The remote work, some people commuted 3 hours each way in Sao Paulo, and now they're working from home. So I think the impact of technology, the deflation you get from technology, is going to make the economy here in Latin America in general more efficient. They might go kicking and screaming, but it is improving, in my opinion.
Absolutely. I mean, in your opinion, like we've talked about, you've been down there 10 years. What, obviously, I'm sure it sounds like you're very bullish on Brazil, obviously. I mean, you live there, you're making your life there. So clearly, I think it goes without saying you're bullish on Brazil. But what other regions within Latin America are you both bullish and or bearish on for the long term? Not just in the near term, because I'm sure there's problems with everywhere, but like, long term, bullish, bearish on.
Yeah, I think it depends on what asset class you're talking about too. I mean, I'm going to go to Uruguay on Saturday, and Uruguay is stable. It's wealthy. There's not very many equity opportunities. It's only 3 million people. But if you wanted to make a farmland investment, it's some of the best farmland in the world at a reasonable price. So Uruguay for farmland. I think Ecuador is starting to emerge as a mining jurisdiction. You're starting to see increased mining there. One of the companies I covered that I still own is Lumina Gold, which is it's an exploration, it's a drill story, but it's a huge deposit and world-class deposit. So Ecuador has the potential to become an emerging mining jurisdiction. And then I think the fastest ascending country in Latin America is El Salvador by far. I mean, their numbers are through the roof, and 30% tourism growth, 10% GDP growth. It's really impressive to see the talk about the opposite of geopolitical risk or how Latin American countries can mitigate it. I mean, their government does an amazing job of communicating with not just their own people digitally, but the wider investment community. They post everything. They're upfront about what's wrong, like what problems they're facing, what they're trying to solve, and then how they're going to solve it. So, El Salvador looks as ascending as any country in Latin America. Granted, it's small, so like there's not going to be that many investment opportunities, you're still probably going to be able to find better opportunities in Brazil because there's 20 times as many people, 50 times as many people. But yeah, I'm bullish on El Salvador too. If I wanted to buy a beach house, I might look there.
That's so interesting. You say El Salvador. This is why I love talking to folks when they're on the ground and getting better understanding. Because from Western media, up here we're here like, oh, they made the huge mistake of making nationalizing Bitcoin as a currency. Like they're screwed. Here you go. But so that's fascinating to hear that. Like that happened, and that is still something that's going on. But it sounds like it doesn't really matter. The country's on the up and up.
Yeah, tell that to the hotel owners that have 30% tourism increases, right? Or tell that to the people, 25% of their economy is remittances.
Mm-hmm.
And Western Union is a horrible company. I mean, they would take 10, 20%. El Salvadorians would have to go, an hour each way. They might get extorted by gangs on the way out. And now they remit with Bitcoin and they keep 99% of their money. So that's a huge economic gain. And when you start from such a low base, it makes a huge difference, right? Like,
that's a good point, man. Yeah, I mean, look, hey, I'm a big fan of professional surfing, so like they've had the El Salvador event for the last couple of years. So I mean, I don't know if that's made a huge market difference or anything like that, but it's just an example,
right? And they're their brand is as strong as any country in Latin America right now. Their tourism brand. I kind of after the lockdowns and everything, I travel a lot, and I think a lot of the tourism brands, if you think of countries as a tourism brand, got completely reset, right? Like some people never go to Australia again, right? Like 3 years ago, no one would have ever thought I should go to El Salvador. They thought it was one of the most dangerous places in the world because it was. And, now El Salvador's got one of the stronger tourism brands you see on the internet. And yeah, good for them.
No, absolutely. I mean, how do you think about there's other regions in the area. I mean, are there any ones that obviously Venezuela is probably one that you're a little more cautious to get exposure to, but are there any other countries right now that are kind of in the middle of figuring some stuff out that you really more or less stay away from?
I was in Argentina, I mentioned before we started talking, during the World Cup. I spent 2 months there, a month in Mendoza, a month in Buenos Aires. And I pulled up, I start with the whole list of public companies. I started looking at a few, and I'm looking at the balance sheet, and then I'm remembering, while I'm there, the exchange rate changing 10%, every other week. I see, rationing at the grocery stores in Mendoza, limits on how much you could buy. And I look at it, I have no idea how to value a company in a hyperinflationary environment. So I really, I don't know what to do. I mean, there's some companies too, like I own Fortuna Silver, and they have one of the largest gold mines in Argentina, but the market pretty much puts it at zero value. I don't know what to do with Argentinian assets in a hyperinflationary environment. So yeah, some people do. I know people, there's still equity investors. I mean, historically, they've always had vulture funds that'll come in and buy their distressed debt. But I don't know. I can't get comfortable with 100% annual inflation. I don't know what to do.
Yeah, no, I'm almost like, back in 2009 when I was there, it was 4-1. I mean, I was having a great time, right? 4-1, the Argentine peso to the dollar. I was, everything was really, really cheap. I mean, now
and the spread between, it's historic too, because the spread between the official rate, like what the government will give you when you go to the ATM,
yeah,
and then the rate you get on Florida Street from the Cambio guys, it's like 100%. Like I would get 150 at the ATM, and I'd get over 300 exchanging cash. So it was I don't know how you plan anything economically. Like how do you make a CapEx investment that takes 2 years? How do you do a payback period, or how do you do any of the economic planning that you need to do long term under that environment?
It's such like of all the countries down there, like when I was studying down there, it was always Argentina was like the problem. Like they just cannot get their shit together.
And it's so hard to understand when you're there too, because like there's smart people, there's good entrepreneurs. Like you're walking down the street and there's these amazing restaurants, and it feels investable while you're there. And then it feels like, wow, this is way better than I expected. I should probably invest here. And then you look at the balance sheet, how much, or at what valuation, or what are the returns going to be? Are they going to just expropriate my assets and take? There's just so many question marks that it's hard to put a discount on anything there.
I mean, Buenos Aires really is the Paris of South America. Like it's really just, it's
Amazing.
beautiful, amazing city, so vibrant, so much just commerce everywhere. The night, everything about it is so amazing. So you're right. That's such a great point, man. I never really put myself in that perspective. I mean, at the time I was partying super hard. But
one of the things that's fascinating too, but one of the things that's fascinating too, like if you read about the Weimar Republic, when you have hyperinflation, people just spend everything, right? So you can't save. So what do? So in Buenos Aires and Mendoza, you couldn't get a reservation at a nice restaurant. Like lines out the door because, screw it, it's going to be worth 10% less next month. I might as well just go and have a nice bottle of wine and a steak. So it's this really interesting phenomenon where like it's fun. It's a great place to vacation. It's good value. There's amazing restaurants. The restaurants are packed, but long term, what do you do? I don't know. So that's one I just go back and travel, and it's amazing. I love the place. I love the people, but I don't know. I can't pull the trigger on an investment there.
Yeah, fair enough. You've already mentioned a couple names of some companies that you have exposure to. By the way, real quick, Gruma, are you shareholder? I'm assuming you are.
No, Gruma I don't own. Gruma I don't own.
Oh, okay, good. All right. I'm glad.
And I always make sure. I always make sure in the newsletter to put it in bold with stars if I own it or I don't own it.
Very good. All right, cool. Yeah. So like I said at the very top, most of my exposure to publicly traded companies operating in Latin America, at least in microcaps, I've been literally 99.9% via the mining and natural resources industry. In your newsletter, LATAM Stocks, you offer up various investment ideas that you find interesting. And as you say, and I quote here, this is from your about section, that the newsletter will filter through the noise and present readers only the most interesting and compelling companies in the region, end quote. How do you go about finding the most compelling companies in the region?
Yeah, so my research process is kind of simplistic. I pull up a list of every publicly traded company in the country from their local stock exchange. So I'll go on the B3 in Brazil. I'll copy and paste it, and then I'll work my way down the list. I read the full annual report because my goal is I like to learn about the region as I'm doing it because there's a lot to learn, and then I kind of rank them, right? Like I put them in very good, like this is a very compelling company, medium, like maybe revisit, and then some of them I'll even read and like forget this company, don't waste your time again. So yeah. I start with the full list and I work my way through it, and whatever company I feel like doing that day, I do the full annual report.
You kind of answered my next question because I was curious if you were, do you mostly look at companies that are locally listed, or did you prefer, some of these North American listed companies that have operations down there?
So for the mining stocks, they're mostly listed abroad, right? So right, I think like TSX, TSXV, there's only one pure play gold miner listed in Brazil, for example. So if you're going to do that, you pull up the mining stock separate. So like mining's a separate research process, but then the rest of the stuff, yeah, I'll pull it up. And then on the chance, I run a fairly concentrated portfolio for myself. So like on the chance I do want to buy it, if they have a foreign listing too, then I'll think about what brokerage account, if I want to try and get exposure locally or abroad. But yeah, I'll look at anything. I don't necessarily care if I can buy it or not. When I look at it, I'm trying to learn about the region. And that's how I think about the newsletter too. I'm not trying to necessarily cover the best opportunities. Like, oh, this company is going to go up 20% in the next 6 months. My price target is X. I'm trying to bring like compelling companies that can teach a wide range of investors about the region, about the company. So a company I haven't covered yet, I don't own, is called Grupo Bimbo. And Grupo Bimbo is a Mexican baking company. So they have 4% of the global baking market. Most people have never heard of them. Right, I wouldn't buy it. It's expensive. It trades at like 23x earnings, 4x book. It's levered. But if you're a commodity trader and you want to understand the wheat market, you should probably know about them. If you're interested in global food production, they're worth following. They're huge, right? And that's the kind of company I try to cover. Same with Gruma that I just covered, the largest tortilla manufacturer in the world. They're in 110 countries. I had interacted with a bunch of their products before I knew Gruma existed, and like, oh wow, this is the company that owns Mission Tortillas. I had no idea. So,
so you covered. It seems like the main two industries, at least that you covered recently. Obviously, resources. We talked about that ad nauseum, but then also on the food side, right? I mean, are those clearly the two main sectors that are publicly available, or is there like a sprinkling of tech or anything else?
It depends. You'll see the most robust tech community or publicly traded tech companies by far Brazil. So Brazil has a tech investment, a large portion of the venture capital that comes into South America or Latin America goes to Brazil. So there's plenty of tech companies to look for. But I think, the most compelling that I can understand the best, I always look for companies I can understand, and like tech's a little harder. So it makes sense, right? They're so resource rich here. They produce so many hard and soft commodities that, it makes sense that some of the best companies, the most compelling companies here are going to be value added companies that make bread or tortillas or coffee. It makes sense that would be the bias.
For sure. So what's some of your, when you are looking to potentially add it to your portfolio, or, what are some of your criteria when you're digging deep into some of these names?
Yeah. So the first is, like I mentioned, the business that I can understand. So one of the things you'll see a lot of in Latin America is these big conglomerates that have a bunch of businesses that don't go together. So you'll see like a car parts manufacturer that also owns like a large fruit farm and a copper mine. And I look at those and I go, maybe these are all three great businesses, but it's so complex to unpack that I kind of, especially when you're thinking about the geopolitical risk, like what's the geopolitical risk? The mining industry is hard enough, but mining industry plus manufacturing plus another industry, it's just much harder to discount. The risk compounds a little bit. And then, like we mentioned too, a country that's stable enough to be investable in terms of geopolitics or the currency. So Argentina, it's not that volatile politically, but the currency's terrible, right? So like I could get around the geopolitical risk in Argentina, but I can't do anything because of the currency. And then Peru, like we talked earlier, the geopolitical risk at the moment is pretty high. So that's somewhere I would look at differently than I did 6 months ago. And then if the country is investable, like decide what markets I'm going to look at before I spend my time. And then if the country looks investable, I look for industries that aren't necessarily going to change as the geopolitics changes. So maybe the best example I could give you would be like an opposite of what I look for, which would be like Petrobras in Brazil. Petrobras in Brazil, every time there's a new government, the first thing they do is they just start messing around with Petrobras. They change the directors, they change the policies, the dividends like this, the gas prices is going to change. And I have no idea, like I'm not an oil investor to begin with, but like just generally as a principle, like there's certain industries or certain companies where you see where they just come in and politics clearly affect the business constantly. And then currency is always a problem here. So I look for companies that have a certain level of pricing power where they can deal with the inflation that's inevitably going to happen in Latin America. So like food is one of those, right? You can pass along food costs to a certain extent.
Got it. Yeah, that's really helpful. I mean, look, this is a microcap podcast. I'm a big fan of, talking with management down here. For you as part of your process, are you big on talking with management, or are some of these smaller companies out there, is management accessible? Love to hear your thoughts there.
I generally don't. I generally can make a decision based on the financial disclosures and my understanding of the markets. And then, so for example, I run a concentrated portfolio. We can talk about my largest position that I own right now. It's called International Meal Company. Meal 3 is the ticker. It's only listed in Brazil. And their management, for example, has done a really good job of communicating their strategy. I know what they're going to do. You look at the last 2 years since they've been there and they've executed. So I don't feel the need to talk to them because I can see by the results that what they've said they're going to do, they're doing. So, yeah, but we can go deeper into Meal 3 if you want. I love the company.
No, absolutely. I mean, yeah, give us the full pitch, because I think that'll also give some folks, like a good quality example of, sure, how to look at the region.
So they have 560 restaurants in total throughout Latin America. It was founded originally by the private equity company Advent International, and Advent exited completely in 2019. But it was this weird mix of all throughout Latin America. So they had like 8 restaurants they just sold in Panama, like Hardee's Burgers. They have a catering business that does airport catering. They have Margaritaville, which is an American company. So this weird mix. And they ended up over leveraged. So new management came in about 2 years ago, and their strategy was to focus on their core brands and then sell off the rest. So it's a turnaround story. They're going to focus on Margaritaville, which is like, I don't know, it's Jimmy Buffett branded restaurants in the US. There's like 26 of them. I don't know if you've ever been to one. They play the same.
I think I've been to one at an airport at some point.
Yeah. Yeah. So then they have exclusivity with Yum Brands. So they represent all the Pizza Huts and Kentucky Fried Chickens in Brazil. And then they also have this really uniquely positioned highway chicken restaurant brand called Frango Asado that's profitable, and they're going to focus on those. So the market hated it, right? So Advent exited in 2019, then they had the COVID lockdowns, and it just dumped. And it still hasn't recovered, and it's in the dirt. But valuation-wise, it trades at like 100 million USD roughly. And, just the Margaritaville franchise, which is 100% US restaurants. So I won't put a country risk premium on it. We'll call it US markets. It's probably going to do like 30 million in EBIT this year. So if you put like a 3 or 4x multiple on that, you get the valuation for the whole company. And then you get Frango Asado, which makes money. They're another probably like 30 or 40 million dollars by the same multiple. And then they still have, 300 Pizza Hut and Kentucky Fried Chicken restaurants combined. And they just announced with Yum Brands. Yum Brands just renewed their Kentucky Fried Chicken master franchisee agreement. So that was a huge risk that is no longer outstanding. So they were definitely discounted for that. And yeah, so they're going to open up 400 Kentucky Fried Chicken restaurants in Brazil in the next 10 years. So there's growth. So I think, it might stay depressed for another year. They are over leveraged, but they have the assets on the balance sheet to sell off to more than cover the debt. And they're suffering. The results are suffering definitely because of the high interest rates here. So a lot of their debt's denominated in reais, and the interest rates are 13.75% here on the interbank. So that's definitely been a drag on earnings, but it's not going to be like that forever. So I'm content to just, hold it, wait for the debt issue to be resolved. And then I think it turns into a growth story once they get the financials fixed.
Very good. And Patrick, just real quick, from compliance purposes, I believe you said it at the top
I
there.
own it.
Yeah.
It's
your largest. I think you said it's your largest.
It's my largest stock position. Yeah, by far.
Right, cool. All right, man. I mean, look, we've covered a lot here, and you're definitely. I would love to have you back on to talk, specific regions as things come up and as things change. I really I so enjoyed our conversation here and everything, and learning everything about the opportunities in Latin America. But to close this out here, my last question for you is what do you think has to change in order for more folks to start allocating investment resources to gain exposure to Latin America?
Yeah, so I think you look at it on a country by country basis, right? So I think we talked about El Salvador. El Salvador is gonna have higher foreign direct investment numbers next year than they had this year, right? They're on a growth trajectory. So I think stability. I think the best thing a country can do is stability. That being said, I think there's always going to be inflow outflow problems here because they are very commodity rich. So the commodity cycle is always going to affect foreign investment here. And then generally speaking, I think it's like education too. So as the world gets wealthier, you're going to see a more absolute number of investors start to look to Latin America, maybe not on a percentage basis, but yeah, the more information that's out there, the more accessible that information is about the good companies that are here. I think, more institutional and retail investors will start to look at it because, like the company I covered, Groom, I don't own it, but it's a very investable business, right? Like maybe I don't like the multiple, but a family office might be very content to pay that and hold it for 15 years. So I think there's plenty of opportunities here if you're willing to pick through them and, adjust your perspective on the geopolitical risk and weather the storm.
Very good. Well, Patrick, with that, man, thank you so much for joining me. Where can our audience go and find more information to follow you on social media as well as subscribe to your newsletter?
Yeah, so I'm on Twitter at LATAM Stocks, LATAM Stocks. I use LinkedIn, so you can find me, Patrick Followed, on LinkedIn. And then the newsletter is latamstocks.substack.com.
Patrick, thank you so much again for joining me. Really do appreciate it. Good luck, stay safe, and I'm really pumped for our next update.
This was a blast. I hope to talk to you again soon.
Absolutely. This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network, SNN Inc., and the Planet Microcap podcast and the representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast.